Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of Rio Tinto Group, ticker symbol RIO, one of the heavyweights in the mining and metals space. If you're looking to understand whether this stock deserves a spot in your portfolio, stick around because we're covering everything from financials to recent performance, valuation, and more. Let's get started. All right, let's set the stage. Rio Tinto is a global leader in mining with operations spanning iron ore, copper, aluminum, and a range of other minerals. Headquartered in London, they've been around since 1873, so this isn't some new kid on the block. They operate in over 35 countries, employ around 60,000 people, and have a market cap of about $158 billion as of the latest figures. If you're into commodities or looking for exposure to industrial materials, Rio Tinto is a name you can't ignore. Let's break down what makes this company tick and where it stands today. Now, a bit more about Rio Tinto's business model. They're primarily focused on extracting and processing mineral resources worldwide. Their key segments include iron ore, which is their bread and butter, along with aluminum, copper, diamonds, and industrial minerals. They've got major operations in places like Australia, Canada, and the US, with significant projects such as the Pilbara iron ore mines and the Oyu Tolgoi copper mine in Mongolia. What stands out is their scale. They're one of the largest producers of iron ore globally, which ties them directly to the steel industry and global infrastructure demand. Plus, they're pushing into greener tech with initiatives like low-carbon aluminum production. This is a company with deep roots and a wide reach, but let's see how that translates into numbers. Let's talk revenue. Looking at their 2022 breakdown, Rio Tinto generated a massive $55.5 billion in total revenue. The lion's share, about $33 billion, came from iron ore, which is roughly 60% of their top line. Aluminum, alumina, and bauxite contributed around $14 billion, while copper added $3.3 billion. Smaller segments like diamonds and industrial minerals brought in about $816 million and $2.7 billion, respectively. Geographically, Greater China is their biggest market, accounting for over $30 billion in sales, followed by the US at $8.8 billion and Japan at $4.1 billion. This heavy reliance on China ties them to the health of that economy, especially in construction and manufacturing. It's a diversified revenue stream, but iron ore and China are clearly the big drivers here. Moving on to earnings, Rio Tinto's recent performance gives us a lot to unpack. For fiscal year 2025, they reported revenue of $57.7 billion, up from $53.7 billion in 2024. Net income for 2025 came in at just under $10 billion, a dip from $11.5 billion the prior year. Earnings per share for 2025 were 6.50 cents, down from 7 cents in 2024. This suggests some pressure on profitability despite revenue growth, likely tied to operational costs or commodity price fluctuations. Over the past few years, though, they've shown resilience. Net income has ranged from $9.8 billion in 2020 to a peak of $21.1 billion in 2021 during the commodity boom. The key takeaway? They're still generating solid earnings, but the trend isn't straight up, and external factors like iron ore prices play a huge role. Let's dive a bit deeper into what's happening behind the scenes with their latest earnings call for Q4 2025. Management highlighted a 7% increase in Pilbara iron ore shipments, driven by strong performance at their Gudai dairy mine. They're also making progress on growth projects like Rhodes Ridge and Simandou, which could be big catalysts down the line. On the copper front, they've ramped up output and achieved first production at Johnson Camp using their Newton technology, focusing on low-carbon solutions. It's clear they're positioning for future demand in green energy and infrastructure. But they did note challenges with flat underlying earnings of $9 billion for the year, reflecting broader sector headwinds. The vibe from the call is cautiously optimistic. They're investing in growth while navigating a tricky market. Now let's crunch some numbers from their financial statements. As of 2025, Rio Tinto's balance sheet shows total assets of $128 billion, up from $102.8 billion in 2024, with cash and equivalents at $8.9 billion, Total liabilities sit at $61.1 billion, giving them a debt-to-equity ratio of about 0.4, which is manageable for a capital-intensive business like this. Their current ratio is 1.44, indicating decent liquidity to cover short-term obligations. On the income side, their gross profit margin for 2025 was around 27%, and net profit margin was 17.3%, both solid but slightly down from prior years. Return on equity stands at 16.6%, showing they're still delivering value to shareholders. Free cash flow for 2025 was $4.8 billion, a bit lower than the $6 billion in 2024, reflecting heavy CapEx spending of $12.4 billion. They're investing big in growth, but it's eating into cash flow for now. So, is Rio Tinto fairly valued at its current price of around $97.67 per share? Let's look at some key metrics. Their trailing PE ratio is about 15.6, which isn't crazy high compared to the industrial materials industry average of around 23.6. The forward PE for 2026 is estimated at 12.4, suggesting the stock might be undervalued if earnings hold up. Price to sales is 2.7, which is reasonable for the sector. Their dividend yield is also attractive at roughly 4%, backed by a consistent payout history. Last dividend was $3.73. Enterprise value is $171.8 billion, factoring in debt, which gives a fuller picture of their market worth. Compared to peers like Anglo American, Rio Tinto looks like a decent value play, especially with its exposure to high-demand commodities. But valuation isn't everything. Let's see the bigger picture. All right, let's break down Rio Tinto through a SWOT analysis to get a sense of their strategic position. Starting with strengths, their financial performance is a standout. Consistent revenue and a strong balance sheet give them flexibility to weather downturns. They've got a dominant position in iron ore, especially with Pilbara, and a diversified portfolio across multiple minerals. On the weaknesses side, their heavy reliance on China for revenue, over 50%, is a risk if that economy slows. Operational costs are also creeping up with big CapEx projects. For opportunities, the push into green tech, like low-carbon aluminum and copper for renewables, aligns with global trends. Growth projects like Simandou could be game changers. Threats include commodity price volatility, iron ore prices can swing hard, and increasing environmental regulations that might raise costs or limit operations. It's a mixed bag, but they've got solid fundamentals to build on if they navigate the risks. Let's check out Rio Tinto's recent stock performance. Over the past week, the stock is up 0.6%, but zoom out to the last month and it's jumped 13.3%. Over 3 months, we're looking at a 41.2% gain, and over 6 months, it's up 60.2%. The 1-year return is an impressive 51%, though the 5-year return is a more modest 7.4%, reflecting some choppy periods. Compared to the broader basic materials sector, which is up 77.3% over 1 year, Rio Tinto is slightly underperforming, but their short-term momentum is strong. Looking at the chart, the stock seems to be riding a bullish trend, though it's worth noting it's trading near the higher end of its range, could be overbought in the near term. If you're a technical trader, keep an eye on support levels around the $85 mark for potential entry points.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.